One of the best ways to manage risk as a trader is to implement stop losses on your trades. A stop loss is an order to close a position at a certain price or a certain percentage to limit one's losses in case of the market turning around or the market not going in the direction that you were hoping it would. The main purpose of a stop loss is to protect a trader's account balance when they are wrong on a trade. Once again, no one is right on every trade, so you want to make sure that you have protective stops to protect the total amount of funds you have from being liquidated or just stuck in general, from being lost. Limiting the trader's losses allows them to continue trading and remain profitable without having to be right 100% on every trade. Once again, no one is right on every trade. Stop loss should be based on technical analysis. It's not just fixed percentages or fixed risk to reward ratios. We'll talk about risk to reward ratios in the next video, but just know that for now, stop losses should be based on technical analysis. Think about where the market would go against you, where would invalidate your idea. And also understand that markets are flexible. They constantly change. The environments constantly change. Trades are situational, and nothing should really be based on fixed entries, fixed exits, or fixed price levels. Stop losses should be placed at the invalidation level. This is a point at which the trade idea is invalidated or proven wrong by the market. So before entering the trade, you should have a clear trade idea. Where is price now? Where could it go? What price level would invalidate my idea? And also consider what could go right versus what could go wrong. You really want to have a pre-planned idea of where your trade will go, how it could go right, how it could also go wrong, and plan for both. Entry level, profit target, stop loss should all be set before entering the trade. Meaning that you know exactly where the price is that you're going to enter in at. You know what profit you want, how much of that is actually going to be profit in terms of dollars and also in terms of percentage gain. And you also want to have a stop loss set all before clicking that buy button. Stop loss should be placed at the invalidation level. This is the point where the trade idea is disproved by the market. So going along with that, we want to have a solid reason behind the trade. This could be reasoning based on support levels. Maybe you think the price has fallen to this specific level and you think it's going to bounce back up. Or maybe on the reverse, maybe price hit a resistance level and you think it's going to come back down, so you want to short that. Maybe you're suspecting a breakout, maybe some sort of overall trend reversal, maybe a Fibonacci retracement, EMA crossover, maybe some sort of indicator signal or chart pattern. Regardless of what the reason is, it should be pre-thought of and planned out. It shouldn't just be something that's randomly coming to you that's telling you, hey, I want to buy this now, it's going to go up. There should always be some sort of concrete idea, concrete trade idea to prove to essentially prove why you should put money into the market. Stop loss should be placed where this idea is invalidated. So this could be, where does the support level fail? Where does the indicator signal fail? Where does the chart pattern fail? These are all different ways to approach how to implement a stop loss. The main thing to understand is to know when you're wrong. So here's an example of a long position that we could take on Ethereum. This is Ethereum to US dollar on Coinbase. This is the 4-hour chart. And let's say we opened our position somewhere around here, about 3,030, and we're planning out a trade idea. Now, our idea is that we saw the market come up to this peak, this high of nearly $5,000 per Ethereum. It came down. We saw this high, and then a newer high, or I'm sorry, a higher low, higher high, a higher low. So overall, this market was moving upwards. And then we see a market structure break, an overall reversal in the trend where we saw a lower high followed by a lower low, lower high, lower low, lower high, lower low. Overall, the market was producing these lower highs and lower lows up until about this point, where we're starting to see what could be a potential market structure break to the upside, where the market is reversing. We do see at this particular moment a pullback to about this level of about low 3,000, maybe 3,030 or so, which is a significant price level, because if we look towards what Ethereum has done at other situations throughout 2021 at this particular price range, we do see that there's a significant level of buildup and overall price movement and consolidation within this period, between $3,000 and let's say $3,300. So the price has significantly stayed within this range, broke up to it, acted as support for a little bit, came back down, acted as support. It fell below, and we do see that there's another significant area observed here where price reframed. This fell as a level of support. Price did not fall lower than this, about 28,000, maybe 27,000, give or take. We did see this one particular wick down here, but the majority of the movement, the majority of this price pattern stayed within this range. And here we could say that this is a significant support level over here. We also see here, price came up to here and acted as a level of resistance. We also saw it here as well. Price came right up to this level and was rejected, but did ultimately produce a higher low. So overall, we are seeing in the short term an uptrend in prices, producing higher highs and higher lows progressively. Here we're starting to see a pullback, and we're just at this key area. So our idea is that price will establish a higher low compared to here, and will produce a higher high. Where could this go? Well, looking at other parts of this area of other instances of price action in this area, in this range, price typically came up to about this level, this $3,300 level, right? We saw it here. We saw it here. This significant support and resistance found here, overall consolidation in this area here as well. Price bounced between here and also here as well. So we could say this particular range is reasonable. There's a reasonable amount of belief that, hey, price could come up to here. Now, could price just go straight up? Probably not. It's probably going to come up to this area before meeting significant resistance. So we could set our price target, our profit target, around $3,390. That's where I set this. Now, we don't want to plan just what could go right, but also what could go wrong. So where would my trade idea be invalidated if price were not to produce this newer high and reach my profit target? Well, looking at the overall market structure, I do see that this particular level observed here, this is the most recent area without looking at the entirety of the Ethereum chart throughout 2021. We do see that there's a strong sense of support found here, particularly that we saw throughout September 2021 of about 28,000, maybe high $2,700 per Ethereum. So let's say, and also we also see here our most recent, or one of the most recent higher highs produced in early February was just about 28,000 as well, from this low of 22,000. So we could say that this red line that I drew could be a significant level as well, where if price were to fall below that, this would invalidate my idea of these consecutive higher highs and higher lows, and then we would probably continue to the downside, right? This could just be a quick relief rally, and then the price could come back down. So I'm going to set my stop loss here, and this actually works out pretty well because I have an 8% a stop loss set 8% below my entry. So here's my entry at $3,035. My target is about 3,391, and I'm looking to gain about 12%, maybe about 12.5%. And if I'm wrong, I'm going to lose 8%. I'm going to limit my loss because let's say if this comes down to here, most likely this is probably going to come down even lower. By having the stop in place, I'm preventing any further losses. So even if price were to keep climbing down, automatically the exchange, the platform that I use, is going to automatically implement a sell where the position is closed out once the price hits this level. Now, in reverse, we can also use stop losses when we're looking to short. So here is a trade idea that where we could have potentially shorted. This was in early January. So here we see overall price producing lower highs, lower lows. Price is trending downwards. Here we see a high, a lower low, lower high, lower low, lower high. Generally just lower prices. Now, what we could do is if we're at this high point, we saw price came up to here and it failed to produce a higher high or even match the high produced over here. So this generally tells me since we are in a downtrend, the market structure is generally facing to the downside, we want to trade with the trend, meaning that we don't want to take any positions, long any position, because price is not going to probably produce a higher high. Price is going to have a hard time going up when there's all this pressure, all this momentum to the downside, right? Lower highs, lower lows. So we want to trade with this trend. So we have our open position around here, and we identified this level particularly because the market wicked down to this price level and bounced right back up. Price also came back down to here and retested it, but overall failed to produce a higher high. So now we're starting to see a breakdown. Overall, that buying pressure is weakening. And if we come down one more time to here, we're probably going to see a breakdown of this market structure. We also see, if we're looking at the general market structure and the overall market pattern observed, we could say that this particular area is a significant area, a level of significance, if you will. We could say that this particular area maybe is a significant level of support. But as we've seen, we're starting to see the breakdown here. We saw this strong wick down. We saw a batch of lows produced here, and then an even lower low produced here as well compared to here. So generally, prices are trending down. Where would be the next level that we could particularly short from? If we're going to short from here, where could price go to? Well, maybe around here, because we do see significantly this level acted as this level of about 3,400. Once again, that $33,000, $3,300, $3,400 level on Ethereum. It acted as resistance here. Here it acted as support and resistance. The significant level observed here, it acted as support over here as well. So price could come realistically down to here. So we'll set our profit target around there. 11.06 percentage profit if the price were to come down here. Now, if the price were to reverse and I'm not successful in my short and the price were to go up, what would invalidate my trade idea? Well, here is our most recent high. To invalidate this trade idea, I would consider overall a higher high than here. But what I'm going to do is I'm going to have a little bit of a buffer. Now, if price were to come back over here, because we touched back at this support level, if price were to produce a higher high compared to here, I would consider my trade idea to be invalidated. So what I'm going to do is I'm going to set a stop loss just under this neckline of this move, essentially. Right underneath this price pattern, because if price does come back up to here and produce a similar or higher high, my whole thesis of the market producing these lower lows and lower highs and then this descending pattern would be invalidated, because now we're just overall we bounced off this same price level that we found here, and if we're producing a higher high or even a close high to the one produced here, that means buying power is starting to ramp up again, or maybe it's consolidating, compared to if the price were to go down, then we're seeing buying power weaken over time and selling power increase.